the bigger challenge I find most people complain about is that these ETFs, they don't really pay consistent dividend. If you can see, look at here, for example, this ETF started paying the dividends. First time was in October 5th, and then November, December, January, February, March, April, May. But you can see the diff. There are huge differences here. Whenever they pay, there's a 90 cents at 91, there's 65, 50, 58, 60, 55, 76. So the dividend and distributions are all over the places. But then here I just did the recent dividend was in May 6th, and on average we're getting 68 cents, because this average I'm trying to give you guidance on this channel. I always give you guidance on how you can structure your income using this kind of guidance I'm providing to you. So if it's the first time, just make sure you subscribe. On this channel I always bring this type of update and show you guidance on how you can structure your portfolio for especially if you're a passive income investor. So today we're going to talk about JEPY. I'm going to show you how this ETF is structured. I'm going to look at the price of this ETF right now, and then also we're going to look at the spreadsheet that I've made, how much you need to generate 7,000 to 75,000 annually. So distribution rate right now is 54.28, and then distribution it pays monthly, and that's the beauty about this ETF. But we look at what this ETF has to offer. So JEPY is the first put right ETF on the S&P 500 using daily option to seek enhanced yield for investors paid monthly. JEPY aims to achieve consistent monthly yield distribution for investors coupled with equity market exposure to the S&P 500. JEPY is an active managed exchange traded fund, or an ETF, that seeks to enhance income constructed of treasuries and S&P 500 index option. The strategy I'm going to show you on holding what this ETF holds, and then the strategy objective is to generate outsized monthly income or distribution by selling option premium on a daily basis. The fund uses a daily option to realize rapid time decay by selling in the money option put. And an investment objective, of course, same as any other. These are high yield paying ETFs. The first one is to see current income. Okay, the fund's secondary investment objective is to seek exposure to the performance of S&P 500 index, subject to limit on potential investment gains, because this is very important, guys. Here it's subject to a limit, because there's always limit. You can, if you are receiving dividend, you can perform, because whenever the S&P 500 goes up, they're gonna have to sell those options, right? By selling in the money put. So you gotta have to understand that. So you're not gonna perform as well as S&P 500, but of course S&P 500 gives you only 0.2% dividend. This one gives you almost 54%, so that's the difference. And here there is a very little good notes here. As I said, there's no guarantee that the fund investment strategy will be properly implemented, and an investor may lose some or all of his investment. But that is for any type of investment. Even if S&P 500, you would see the same. Vanguard will tell you this exactly the same thing, even though there's highly less likelihood you're gonna lose your money in S&P 500, or even this one. It might not on one day. I mean, it might be going down, and you have to be paying attention and stay up to date. That's why this kind of channel is very important. So just make sure you subscribe. We look at the fund detail here. We can see net asset right now is 129 million. Pretty good size. Not billion, but 129 million is a good size. Premium discount is 0.5, and fund inception date was incepted in September 18, 2023. Ticker symbol is JEPY. So again, don't confuse JEPY with JEPY. There's another one, JEPY. And by the way, I think this reminds me that I'm going to make a video between JEPY and JPI. The primary exchange is New York Stock Exchange. We look at the closing price is 1630. NAV is 1629. Management expense ratio is 0.99, so about 1%. For most of these ETF, about 1%. It's kind of a little bit high end, but of course you're getting 54% dividend. We'll look at the performance. We don't see much here, but we can see since inception, this fund has returned about 7.42. This, by the way, we can see a market return. This is including the dividends, so we have to be clear on that. Okay, if you reinvest a dividend, you get a 7.42. But we can look at here. We can see this is the performance on the chart here. You can see the funds S&P 500 enhanced option income ETF JEPY price is 16 and 52-week range is 1581 to 2012. We'll look at the max. See, he started about 20, right now at 16. So only if you put those dividends, then you're going to outperform this fund itself. But if you've used your money that you've received, then you'll be for sure down. Is he going to recover? That's to be seen. But there's also a strategy. Check my other video, make a strategy how to protect yourself from this type of downfall like this. And by the way, I know a lot of people complain about, like, well, you know, these funds actually they just have a decay or erosion. But there's some other funds that I've covered on this channel that actually they pay highly income. Like for example, YMAX pays a huge amount of money, but also it hasn't gone down. So just make sure which fund. You have to pick the fund, and if you pick these ones because it pay a lot of money, just make sure you also diversify. And you can check my other video I just made, I think 2 weeks ago. I'll leave a link below. That strategy you can use to make sure you don't have this problem. Now let's go back to our top holding. Now remember, they say I told you that it holds a treasury and S&P 500, and we can see that it has 6 holdings. The holdings mainly, they are US bonds, so United States Treasury notes or bonds, and there is a United States Treasury bond. It's all bond, and there's very little on cash they holding. It's just very little. It's only like 1%, and the rest of the money you can see here S&P 500 option. But it's minus because of course they use a leverage a lot, and they put a chunk of money on the treasury, and of course right now it's a higher yield, so they generate a lot of money from those bonds, and of course they use those bonds income they receive plus the income they get from the call option, and of course that's how they are able to provide or to generate those income to give to investors. We look at the distribution. I've showed you the distribution. The first one was the first distribution they paid was in October, and that was 90 cents. And of course there's more coming up, but right now they've only paid up to now, which is May 6th. If I'm an investor who invests in this fund, because there's a variety of payment, so it's just like a gig work, right? I mean, your income is not consistent, so you have to make sure you have to average annual monthly. You say, okay, this is how much I'm making on average, and that will determine how to spend. Now we'll look here how much you need to invest to be able to retire. Now the ticker symbol is JEPY. We look at the price right now, 16.39, using the current price that they paid the last distribution of 0.79 cents, right, which is this one here, guys, right? You can see 76 cents. We look at the yield, it will be 56%. If we look at the average though, if we go on average using the same price of 16.39, the average, which is 68 cents, then the yield is only 49.79, which is about 50%. So either one is more than 50%, which is a pretty good yield. You can get that yield anywhere else. Now if we go to how much you need to invest, we look at the current distribution. Using current distribution, you invest in 100,000, you're gonna get 6,101 shares. That will give you monthly income of 4,635, and annual income will be 55,644. Investing 150 is going to give you 9,152 shares, and monthly income will be 6,955. So almost, if you round up, it's almost 7,000, and annual income will be 83,466. So either of these incomes, guys, you will be able to retire in a lot of places. Just depends where you live. Just make sure you don't live in those states where there are huge tax implication, and of course the rental or houses are very expensive, like California or New York. If we look at the average distribution now, you're getting, of course, the same number of share, the same amount of money. Now it will be a little bit less because we only gonna get 4,149, and it will be 49,786 annual income, and you're going to get 150. From 150, you're gonna get 6,223. You're getting 74,680. But guys, all of these incomes are pretty good. It doesn't matter if you're getting average or if you're getting the using the current distribution, because you look at the current distribution is only like a 76, but there's one time also they did pay 90. So if we put 90 there, it would be even more. So that's how to calculate, and this is just a guidance on how to use JEPY to generate monthly income that you can pay your bills and retire today. That's all I have for today. Catch you on the next one. Make sure you subscribe, and if you like this content, give me a like. Bye bye.